As a quick teaser, I do believe Tesla has an intrinsic value worth multiples of the current share price. Like, I believe the company is worth at least $300 per share, while the company is trading at just $150 per share on the stock market. And I believe this to be true, especially after the pretty darn favorable Q4 earnings we got just yesterday. So hopefully that grabbed your attention. Like I explained during my value investing portfolio series, I believe Tesla has recently become a value investment. Value investing is where you buy something that should be worth $10 for $5 effectively. It's a principle where price matters a lot. And historically, from any price metric, price to earnings ratio in this example, Tesla has always been hella expensive. Even though I have always believed Tesla to be a tremendous business to own, I just never could have pulled the trigger. I did not want to overpay for the business. But thanks to the recent 75% decline in share price, Tesla all of a sudden wasn't so expensive anymore. And in this video, I will show you exactly why Tesla isn't so expensive any longer. And especially why it might be a tremendous add to your value investing portfolio at the current price point. Now let's start off with my 10-year Tesla valuation. Quick preface to this valuation, I believe these types of models should be as simple as they possibly can. The more complex you make these models, the more secure the answers feel. Sure, but most likely the more incorrect your measurements will be. So we're using these models to get a general direction of where Tesla's valuation should be, not as a precise measurement for intrinsic value. Investing is as much an art as it is a science. Please do not forget that. Okay, cool. So thanks to the company's Q4 earnings report we got just yesterday, we now know the full 2022 earnings per share figure, which came in at $3.62 per share in earnings per share for the full year 2022. Now, since Tesla is a company which is growing at extremely high speeds, like 50% on a production basis according to the management, we should also grow our EPS into the future. I should emphasize that 50% growth is just for the automotive business, but as we can see here, their total revenue is higher than the revenue just from selling cars. That is because Tesla Solar and Tesla Powerwall are also a thing. So that is to say, the growth rates that I'm using here are for the entire business, not just the automotive division. And I am assuming 30% growth in EPS for the next 5 years and 25% growth in EPS for the 5 years after that. I basically got these figures by just being more conservative than the management team. But if you like, you can always decrease these growth rates to your liking. These growth rates should allow Tesla to grow all the way from $3.62 in EPS in 2022 all the way to $41 in EPS by 2032. And I know more than 10xing your profitability in just 10 years doesn't sound conservative. And I agree, but we should keep in mind that Tesla has only recently become a profitable company. Like 2021 recently. Since the company was unprofitable such a short while ago, we are still expecting significant growth in profits, especially if the revenues Tesla is making continue to increase explosively. Anyways, the purpose of this future EPS figure is to go to the intrinsic value today. But before we can do that, we need one more calculation, which is to calculate my future stock price for Tesla. For that, we need a future PE ratio, which is basically how much investors will pay for Tesla by then. I believe a future PE ratio of 25 is totally in the realm of possibilities, but you can be more conservative if you wish. Anyways, $41 in EPS times a P ratio of 25 results in my future price target by 2032 of $1,025 per share. To give you a bit of context, that would be more than a 550% profit compared to today's prices in less than a decade. That is insane. And of course, we can express that future stock price into an intrinsic value today. For that, we use a discount rate. My personal discount rate, or just my opportunity cost, is set at 15%. And with that discount rate, we get to an intrinsic value of about $300 per share today. There is no need to focus too much on this figure, but the main thing is telling us that if my expectations are even closer to reality, Tesla is a tremendous investment today. Tesla could be an easy 2x on the short term, based on its intrinsic value direction. But more importantly, it tells us that we aren't actively overpaying for a long-term position in Tesla. And that really is the main point behind my thesis. If you believe in the continued success of Tesla, well then this model tells us that you aren't overpaying for the company at this price point. That is a really nice assurance to have. Moreover, this model poops out my personal buy target of $145 per share. Okay, so that is the base model, with the assumptions I believe to be most realistic. This is also the framework I use for my personal investments. However, we could also be more bullish, with for example a higher growth rate, a higher future P ratio, and a lower discount rate, which would really skyrocket the current intrinsic value of Tesla. Or we could be more conservative with a lower growth rate, a lower PE ratio, and an even higher discount rate, which slashes the intrinsic value of Tesla in half compared to my base model. Which model is more accurate is for you to figure out. I just hope that I've opened up your eyes on the opportunity that is Tesla. Also, please keep in mind that the valuation is just a very small point of all the research you should do before you invest in a company. But as a value investor, you are already aware of that. Now, time for a classic YouTuber disclaimer. While I am a registered financial advisor in the Netherlands, I do not have the legal capacity yet to give anyone investment advice. Therefore, this video and any other video on this YouTube channel can never be taken as financial advice. I cannot be held liable for the losses you make while trading according to my opinions. Please do your own due diligence. And with that said, thank you so much for watching. I love you all. Peace.